Big tech leaders are gathering this week in Toronto for the 2023 Collision Conference, and it's all about AI. Yahoo Finance's Allie Garfinkle joining us now on the ground at the conference. Allie, what are you hearing?
Hi, how's it going, Shauna? So Collision is one of the biggest tech conferences in the world, and it's become a key meeting place for startups and VCs. Now, it looks relatively quiet behind me right now, but this is a conference that is expected to attract more than 40,000 people over the next few days. And of course, at the center of the conference is AI. So I got here early and I've been talking to VCs about how they're thinking about this AI hype cycle we're in. And shocker, no two VCs have the same opinion. But the one thing everybody does agree on is that it's early days. You know, we talk a lot about AI on the show. We have a lot of excitement. We hear a lot of excitement from analysts, founders, you name it. But most VCs who I've been speaking to are actually sort of in window shopping mode. They're looking at AI companies. A lot of them aren't ready to buy. Now, this actually tracks with the data we're seeing. AI investments in May accounted for about 13% of total VC investments, and we will see that number go up over time. And a lot of VCs I spoke to are actually hoping to connect with some of the companies they're considering here at Collision. And everyone I've spoken to, whether it's on background, on the record, off the record, everyone is taking AI-related meetings. The bottom line here, I would say, Shauna, is that the bulk of AI investments still have yet to happen, and some of them are going to get rolling here at this conference.
Yeah, so some VCs in window shopping mode, you could say, Allie, at least when it comes to AI startups. But the public companies, we have seen huge run-ups in the excitement over AI. Are we starting to see some analysts say, look, things are getting a little overvalued in the space?
You know, it depends on the company is the short answer, Akiko. But the long answer is it's very hard to tell how overpriced an AI company really might be right now. And the best way I can explain this to you is through a metaphor, so bear with me. If you're familiar with the California gold rush metaphor, a lot of folks say that during a gold rush, the best way to make money is to open a hardware store, offer the picks and shovels, don't dig for gold. Well, the gold rush metaphor, even if you've heard it so many times, does fall a little bit short when it comes to AI. When I've been talking to a lot of these VCs, a lot of what they're saying is that a lot of them just don't know quite what the shovels are yet, and we won't know for some time. So I think there are a few questions that, you know, folks raised about how substantial the advantage of really being a true first mover in AI is, because we don't know what those picks and shovels are. Especially, I would say, if you're a VC, you can't totally pass either, though. So they're kind of in a sort of catch-22, right? On one hand, you don't want to miss the boat. You want to stay competitive, something that I think a lot of folks who are retail investors, for example, are really excited about and interested in. On the other hand, you've kind of got to walk the line. You've got to make sure you don't get fleeced. And I think everyone's still trying to figure out what that really looks like.
They are, and they're trying to figure out the best investments within that space. Allie Garfinkle, great stuff. Have fun at the conference. Thanks.